Good evening, this is Doc Severson for the Theo Night video for Tuesday, April 11th. I'll start out today's video on the S&P 500, looking at the daily chart on the right-hand side here. We started out today with some actual distribution, which has been very rare lately. So we dropped here about 16 or 17 handles out of the gate in about the first hour or so, and it looked like the route was on. You can see this blue line here is the 50-day moving average. Again, I'm not a big fan of using moving averages in technical analysis, but if somebody is actually using this to be able to make buy and sell decisions, I do want to respect that, especially if it comes into confluence with other technical studies. So obviously somebody's watching this 50-day moving average very closely and wanting to make sure that the price closes over there, because once again, this level has been defended 1, 2, 3, 4, 5, 6 times recently. The price refuses to even get down near there, and if it does have the effrontery to go below it, it's closing above it by the end of the day. This leads me to believe that we're at some point here, all this negativity is probably short-term going to flush out to the upside. So again, too much negativity right now, probably going to be flushing out to the upside from there, but I think any upside move is going to be very limited because of the fact that I think right now just about every index that we look at has got concrete overshoes with this 600-point move in a very short period of time on the monthly chart. So every time we have seen this level of linearity, we have seen some type of reaction, some type of reaction, some type of reaction. And this, to me, does not qualify as the type of reaction that typically we would see. Now, the market has the permission to do anything that it wants, right? So I'm not sitting here telling the market what it needs to do. The goal, though, that we're trying to do through using analysis is to try to anticipate what type of reaction that we would expect. I'm not anticipating a reaction like this or even like this. Really, tops are a process. All that I think that we should do is perhaps draw down to a slightly deeper range down here, perhaps to about 2,300. We've not even gotten close to that level yet. We're still about 20 points away on its worst day. Even a move down to 2,300 is only a 4% haircut. And right now, every dip is being bought to the point where it's getting nowhere close to that. And while this is all going on, we have fear and negativity is actually starting to get bought into this market. So we're seeing volatility being bought right now as we're getting close to some risk events, whether or not it's geopolitical risk or whether it's earnings coming up, which really start today and start to heat up as we get into the latter part of this week. And speaking of which, we're going to have to deal with Citi before the market on Thursday, as well as JP Morgan, as well as Wells Fargo is coming up again Thursday. All are coming up on Thursday morning. So a lot of this risk we're dealing with. Friday, don't forget, Friday is going to be Good Friday. This is going to be a market holiday, so no earnings are coming out that day of any consequence. So this is a 4-day week. We should probably start to see movement in anticipation of that. And then we're going to see our move for the week on Thursday. And then we're going to see basically a lot of swivel chairing going on Thursday afternoon as volume basically drops down to nothing. So looking at the other indices, we have the Dow Jones is doing almost exactly the same thing as the S&P in that short-term pennant pattern and holding the 50-day moving average. So that's still good. We have the Nasdaq. Let's look at the futures here on the Nasdaq. The Nasdaq has been very, very strong, although it is starting to move into more of a sideways pattern. So just like everything else, these patterns, which are based on rising patterns, eventually a rising pattern, especially one that's this vertical, will always break to the downside. And we're just starting to see that process happen right now as we're seeing the daily chart go from an extreme trend into pretty much a sideways almost for a month now. We've had just about sideways action on the full index here on the Nasdaq futures. And if we go have a little bit of fun over here and look at that combined symbol that we had for Amazon, Apple, Microsoft, Google, Facebook, and Netflix, if we look at that as an index by itself, we're basically seeing the same thing happening here, as some of the big dogs here are just taking a slight rest as we get down into exhaustion. Now, the wild card here is the Russell 2000. The Russell 2000 is not exactly what you think of as a safe harbor in turbulent times, but this is precisely what it's been today, as the Russell actually got 0.7% bid to the upside today and is in a very long-term consolidation pattern. So the Russell has already done exactly what I was hoping that the S&P would have done some time ago, and is now actually in this reaction since, really, if you think about it, it's been consolidating for 4 straight months now. So this is a major sideways reaction for the Russell. So the Russell actually could be the first one out of the gate if there is going to be an upside reaction. Again, bottom line for me is that I think short term, this market seems impenetrable to the downside, even though we have all the negativity and volatility is starting to be bought. But I think that any upside reaction is going to be short-lived because most of these indices are just not ready to trend yet. That's it for today's report. Thanks for listening, folks. We'll see you tomorrow.